Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's dive into some key stocks that caught my attention today, starting with a company that's bouncing back from tough times. Top Glove, the Malaysian glove manufacturer that trades on the SGX, has some good news to share. They've just reported a net profit of 30.3 million, about 9.1 million, for their second quarter ended February 28, 2025. This is a major turnaround from their net loss of 51.2 million in the same period last year. If we break this down to earnings per share, they've gone from a loss of 0.64 sen per share last year to a profit of 0.38 sen this quarter. That's quite the reversal. What's behind this comeback? Top Glove points to two main factors. First, global demand for gloves is recovering, leading to more orders. Second, they're benefiting from trade diversions as buyers look for alternatives to Chinese gloves, which now face U.S. tariffs. Looking ahead, Top Glove has plans to ramp up production. They're planning to reopen factories that were temporarily closed once their current utilization reaches about 70%. Their goal is to increase running capacity by 10 billion pieces by the end of their fiscal year 2025. For investors tracking this stock, Top Glove shares close unchanged at 0.275 on Thursday. This stability in share price despite positive earnings might suggest that the market had already priced in this recovery. Or perhaps investors are waiting to see if this positive trend continues in the coming quarters. The glove manufacturing industry has been on a roller coaster ride since the pandemic. Top Glove and its competitors saw unprecedented demand during COVID-19, followed by a sharp decline as the world returned to normal. Now, with this profit turnaround, we might be seeing the beginning of a more sustainable growth pattern for the industry. From a technical perspective, Top Glove's share price has been consolidating in the 0.25 to 0.30 range for several months. This profit announcement might provide the catalyst needed for a breakout above this range, especially if the next quarter shows continued improvement. Moving on to ValueMax, the well-known pawnbroking chain in Singapore. They've just raised an impressive $71.7 million through two separate 3-month digital securities commercial papers that closed on Thursday. Both papers were issued on March 3rd, and according to ValueMax, they received strong demand from investors. Let's break down these two issuances. The first is their 3-month series 014 issuance, which raised 23.4 million in gross proceeds. These digital securities will be listed on the ADDX digital platform starting Friday, March 24th. The second issuance raised $48.29 million through their 3-month series 008 SDAX issuance. This was issued on the Singapore's Digital Asset Exchange, SDX, on Thursday, March 20th. ValueMax shares fell slightly by 0.05 or 0.95% to close at 0.52 on Thursday. This minor dip doesn't seem to reflect any significant concern about the fundraising and might just be normal market fluctuation. For those not familiar with ValueMax, they're one of Singapore's leading pawnbroking chains, offering secured loans against gold jewelry, timepieces, and other valuables. They also sell pre-owned jewelry and watches. The pawnbroking business tends to be counter-cyclical, often performing well during economic downturns when people need quick access to cash. This successful fundraising shows investor confidence in ValueMax's business model and growth prospects. The use of digital securities for commercial papers also highlights how traditional financial businesses are embracing new technologies for capital raising. From a technical analysis standpoint, ValueMax has been trading in a range between 0.50 and 0.55s for the past few months. The current price of 0.52 sits comfortably within this range, suggesting a stable trading pattern. Next, let's talk about Fuyu, a precision plastic parts maker that's experiencing some interesting shareholder dynamics. Their largest shareholder, Victor Lim, has made a new request to table resolutions for the removal and appointment of directors at the company's upcoming annual general meeting. This isn't Lim's first attempt to shake up the board. It follows two previous attempts to call extraordinary general meetings for directors' appointments and removals. The company has said it will update shareholders on any developments and has urged caution in dealing with its shares. Despite this ongoing corporate governance drama, Fuyu's shares actually ended Thursday up by 2% or 0.02, closing at $0.10. This slight uptick might suggest that some investors see potential value in a board shakeup. For those not familiar with Fuyu, they're a manufacturer of precision plastic parts and molds, serving industries like consumer, medical, automotive, and electronics. They have manufacturing facilities across Asia and have been listed on the SGX since 1995. Corporate governance issues like this are always worth watching closely as they can significantly impact a company's strategic direction. Victor Lim's persistent attempts to change the board composition suggest he has a different vision for the company's future than the current leadership. From a technical analysis perspective, Fuyu's share price has been relatively flat, trading around the $0.10 mark for some time. The stock appears to be in a waiting pattern, with investors possibly holding off on major moves until there's more clarity on the board composition issue. Now, for a more sobering story about Kooten, the once popular online marketplace that's now in liquidation. According to minutes from the latest creditors meeting, more than $198 million in claims have been submitted by creditors to the liquidator, AAG Corporate Advisory. However, only $34,650 has been recovered so far. This recovered amount breaks down to $20,000 from Kooten's 11 bank accounts with DBS Bank, $14,750 from rental deposits held by landlords of employees, and $500 from the disposal of office furniture and IT equipment. There's a stark contrast between the claims and the assets recovered, especially considering that Kooten founder and chief executive Koo Young-bae submitted information to the liquidator valuing the company's total assets at $685.6 million. This situation highlights the risks in the e-commerce sector, which has seen intense competition in Southeast Asia from players like Shopee, Lazada, and TikTok Shop. Kooten was once a significant player in Singapore's online shopping scene, but clearly faced challenges that ultimately led to its downfall. For investors, this serves as a reminder of the importance of sustainable business models in the tech and e-commerce space. High valuations don't always translate to financial stability, and competition can quickly erode market position. The Kooten case will be interesting to follow as the liquidation process continues. The huge gap between claimed assets and what's been recovered raises questions about asset valuation in tech companies and the challenges creditors face in recovering funds from failed tech businesses. As we wrap up today's Market Digest, here are some key events to watch in the coming weeks. The Monetary Authority of Singapore will be making its monetary policy decision next month, which could impact banking stocks and the Singapore dollar. Earnings season continues, with more companies expected to report their quarterly results in the coming weeks. These reports will give us better insight into how different sectors are performing in the current economic environment. On the global front, keep an eye on the Federal Reserve's comments about interest rates, as these will continue to influence global markets, including Singapore. China's economic recovery remains a critical factor for many Singapore-listed companies with exposure to the Chinese market. Any policy announcements or economic data from China could move certain stocks. That's all for today's Singapore Market Digest. I'm Iggy from the Investing Iguana, reminding you that while we aim to provide informative market analysis, always do your own research before making investment decisions. Thanks for tuning in, and I'll see you in our next update.